Hello everybody, welcome to another video here on the channel. This is episode 7 to my Chart Annotations Review Series. So this is Tuesday the 21st of last week. If you haven't already, I do recommend you guys check out the first episode, work your way up. It's a lot of videos to watch, but you will get a ton of free education that you really won't get at many other places. You can also join my Discord server, which has a free course. You can get free access. It's free trial, and it's cheaper than a ton of other places. So first, let's take off these annotations. Look at the daily. So the daily is going to give us our initial bias. You can see we just have been trading up like crazy. We have taken all-time highs at this point, and we're going higher. So really, there's nothing that tells me that we're bearish, especially because after we took this high, we initially had a sweep, which is bearish, but we tapped this daily fair value gap, and we're just heading higher. So right now, we're sort of bullish going into at least the morning. Looking at this 15, right, we kind of came up, tapped here, going higher. Going to the 1 minute here, if we look at the daily open, we've sort of been trading above it and then below it. We're sort of around it. Let's check the London and Asia sessions. Right here. So first of all, Asia high has been taken out by London. Asia low has been taken out by London. So this really could be seek and destroy, I believe, which is when Asia high gets taken out by London and London low, or sorry, Asia high and low get taken out by London, and then after that we take out London low. So really the draw of liquidity should be up here at London high. I don't really trade seek and destroy, so I'm not 100% sure, but that is something I do plan on understanding this week, but I really don't think it's that important. So after London low is taken, we get displacement up. You can also see downtrend here. We hit into macro, displacement up. There's a market structure shift right here. Little retracement down. We don't trace to this fair value gap, but you can see, anyways, a high is put in here. The macro hits, which indicates a reversal of the previous move. So there's a downtrend, macro hits, we should have an uptrend. Displacement up, tap into fair value gap. And I'm actually going to add this right here. So you have this fair value gap, 1 minute. Your entry would be in this fair value gap. And then stop would be at this candle's low. Here could be your market structure shift. And your TP could be up at this high. It could also be at possible discount of this range, which really wouldn't be that much. So TP here, you know, you could have another TP up here if you want. But you can see this macro reverse the move. TP hit. So now this is 6:45 a.m. Let's play some action. So right here we tap this 1 minute. This 1 minute is from a high displacement candle up. And we get displacement up from here. So a couple things that happen. This is just a couple concepts, and this video is kind of going to go over like what trades are actually, like what models are actual good models versus bad models, models to put high size on, right? Models to put low size on. This would be a low size model. So bigger time frame, we have a market structure shift to the upside. We just took out this high, right? We just swept this low, tapped into this 1 minute, massive rejection off. This could also probably be Standard deviation could mark those levels because this is a manipulation down to take out this low, just to then go higher right away. And again, we tap into this, we make this 1 minute for value gap, we tap into it. So this would probably be a medium entry, right? This would be a pretty decent entry. I'd probably put most of my size in here. TP could be at this high, followed by this tap. We have a massive displacement candle up, and we hit the TP. After we hit 2.5, I'm looking for a discount retrace of the move. So here we tap discount. We tap the 1 minute again, sweep this recent low. And then we come back up and we tap this 3.5 to 4 area. This will be our final target. After this, I'm expecting to see maybe a reversal, continuation. This is most likely where a reversal will happen. All right, if you are confused, I have everything, all these concepts and models explained in my course and in my previous episodes. So we end up creating this high, right? We're just sort of consolidating right here. We sell off, and we have our SMT created. This is the first SMT in the morning that I have drawn out. So in addition to creating this SMT, we tap back into this 1 minute, and I don't know why this is a protected low. This should not be protected low. This would be the protected low down here. So after we create this SMT, this down here is protected, not this. No. Come on. No. There we go. Okay, what happens after that? We get displacement up. Fair value gap right here. Possible entry right here. Now, usually, I would like to wait to see this gets respected, and then I'll take the second fair value gap. So, this did get respected, right? Even though it actually went below this candle, it still respected it. So, this right here, now second fair value gap I'd look to take. Although the only problem is that we create an SMT at these highs. So this means that ES over here, which, just in case you guys are wondering what an SMT is and you have not learned, if you look at the high on ES, so you can see, here's this high. If you correlate this, ES actually matched the high. So when this creates equal highs, ES's characteristic is that when it creates equal highs, it usually will try to leave them, which was not that way for the longest time. Usually if you create equal highs, ES would want to take them, but now they try to leave them. So for example, you have 4 equal highs right here. What do? We sell off. So this would be SMT because ES matched the highs. So honestly, this move could be done. And you can see a reverse back down. So this SMT would be played out. This would actually be the SMT TP, right? SMT TP is technically taken because an SMT is formed here. We sell off. Now from this SMT, I want to see this low right here get taken, right? This SMT says that this SMT right here, as you can see, this is the low that's formed. This would be your TP, and that this high right here should not get taken until this low gets taken. So right here we match it. We have equal lows. That is a great target of liquidity. For ES, when we create equal lows or highs, ES wants to leave them. But for NQ, it acts as like a magnet. So right here, we come back up, tap into this fair value gap. I would add an entry here. And then we'd sell off. This is where you make your money. And the SMT TP is now hit. So what's the next draw of liquidity? Next draw of liquidity honestly could be this protected low. The way protected lows and highs work is that right? They're initially not supposed to get taken. That's why they're protected. But for example, we have this SMT. The target gets hit from this other SMT being formed. So then the previous protected low created from this SMT should be a target of liquidity. So we tap into this fair value gap again, so we could see actually a rejection off of here, and we're entering a macro. So for now, I would honestly expect us to go higher because we are going in a downtrend into this macro and tapping into this 1 minute, and we just took this TP. So if we get any displacement up above a previous high, just like this, I'd look to take some sort of entry. So right here, this would be my entry. This is a pretty good probable entry. I wouldn't have to wait for this to get respected just because it's a macro. They're pretty strong. Most of the time they play out, sometimes they don't. But I've noticed they play out usually like 80% of the time. So entry could be there, stop loss there. And for this trade, you would get stopped out. And that's probably because this protected low is the target. Yeah, this protected low was the draw of liquidity. So this would not end up playing out. But the thing about this macro is we don't have to reverse here. The macro states that like anywhere we can reverse, anywhere inside this macro. So right here could be the reversal point. So we get a big candle, right? Form a fair value gap. If we were to tap into this fair value gap, I probably would do a long entry. We just don't, and we come up and we take this high. So now we have an SMT up here. This would be your protected high. And we actually just sell off straight down to this SMT TP, right? This is the low that's formed. After we create this SMT, additionally, we have this liquidity sweep. This is the draw of liquidity. Sell straight off down to there. We sell off a little more. We have this 15-minute fair value gap. And we just are going right through it. So that shows me that we're bearish. This macro, are we going to see any sort of reversal or retracement? We're not. So we're very bearish. Oh yeah, right here. This entire move is also a manipulation leg because you have these massive candles up, right? These massive white candles up, taking out all of this liquidity, and then followed by strong candles down. So this would be your manipulating. It's manipulating these highs just to then go lower. And here would be your standard deviations of this. So we could expect 2.5 here, possible retracement up, and then sell off down to this 3.5 to 4. So sell off here. We have this 1 minute, gets respected, sort of. And then this is an entire massive order block. So if we probably did hit this 2.5, I could see us possibly retrace off and reject off this order block. So we sell off down here, tap the 2.5. We come back up. And now that we're in this big order block, you could either just put a position in right here, put your stop at the top of this order block. That would not be too bad of a trade actually, 7 points. So let's say we were to do that in this scenario. Let's say we just put our entry. Let's say we did at the midpoint. So we take the midpoint of this. Now, the way I do order blocks is I do them off the body. So let's say you put an entry off the midpoint, which I think it actually hits perfectly. Entry, where's that at? There it is. Put your stop at the candle's high. Your target then, first target would be this low. Just gonna do this like that. First TP would be this low. Second TP would be the sell side. Third TP would be this 3.5 level. So we sell off. And then if you've seen this, you can take another entry if we tap into a fair value gap here. So we don't actually tap into a fair value gap. We just sell straight off to the sell side. And we tap this 3.5 perfectly. So this is probably the end of the move. although it is possible that we can possibly retrace, and this actually retraces to OTE of the move, and you can see it respects OTE perfectly. If I saw this respected OTE perfectly, you could put another entry in here. So you put an entry in here. Let's see, you put your stop at top of this candle. This would be only a 4.25 point risk. And then we would sell off and we hit this low. So now this happened. We have this downtrend, right? We have this massive downtrend, and now we're into a macro. So from here, I can expect a possible reversal if we displace above recent high. We're still just selling off. Still selling off. And we ended out there. After this macro, we get a little bit of displacement up. Sort of just consolidating here, forming more structure. So now going into this macro, especially because market open has finally finished all of its ruckus over here. This is a little bit more of a tricky one. I would say we're going into a downtrend into this macro. So I want to see us possibly reverse to the upside. We start off by having a market structure shift above this high. Now I want to see some sort of retracement down. So we do have this fair value gap. You could take an entry out the fair value gap, or you could take an entry somewhere off of discount of this range. It's kind of up to you, whatever you're comfortable doing. We also do have this order block right here, which is close to discount. So you could take an entry off of this order block. Personally, me, if I was in this trade, I probably would take an entry in this fair value gap, right, targeting the upside. And I'd probably add once we hit this order block. And so these would be my two entries, and my stop loss would probably be at this candle's low. Just like so. We would get close, but we want to hit it. And then we go higher. This would be first TP. And after this TP is hit, I probably would move my stop to break even. So I'm risk-free on this trade. And then we'd probably come down. Now, either I would move my stop and I'd probably get stopped out and profit, or I would not move my stop and I would not end up getting stopped out. So after this SMT is created down right here, this is also pretty. This is also a pretty valuable SMT because we're tapping into an order block. We don't tap into discount though, but we do tap into discount of this range. So yeah, that is discount. So a couple things in this move right here. We retrace down. Number one, we sweep this low. Number two, we form an SMT. Number three, this candle actually wicks below this 50% and taps discount. So all these together sets us up for a very bullish move. So right here we have displacement up. Here's a little liquidity void, or a little liquidity gap. We get a move up. We also create a fair value gap, and we do tap this SMT TP. Also keep in mind this is protected low. This could get taken now. So we then go back down, tap into discount of this leg. So after that happens, we could see a move higher. So here's our move higher. And we just keep going a little higher. So you can see this little model right here is what made this move play out, right? With a little more added structure in here. We just took out this previously protected high. Probably going to rebalance price a little bit. So we do rebalance price a little bit. And then of this little leg right here, we tap into a premium, sell off a little bit more, and then we come up and take this protected high, and then we form an SMT up here. I also want to see if we tap discount of this range. No, we don't tap discount. Very close though. So we form this SMT up here, and in addition to that, you can see we're in a downtrend going into this. This right here, if we displace above this high, this could be your market structure shift. Possible retracement down to this for value gap to go higher. Now, the only scary thing with this is that we have an SMT up here. So it's kind of two things going against one. We have this SMT. So, oh, what did I just do? I did not mean to do that. Okay, 1 second. All right, I'm back. So create this SMT, right? So this is making our bearish, like we could sell off. And down here would actually be your SMT TP. So this is showing, since we had a rejection off of here, and we also did respect this for value gap, this SMT TP should not get taken, or no, this should get taken before this high up here gets taken, right? But the only thing against that, and that's also why it's really important to understand macros, is that this could actually get taken because a macro wants to reverse our move. So we have this low that should get taken, but since we have this macro that wants to reverse the move, this could actually get taken. So let's just see what happens here. So we tap discounted this range. We're respecting these 1 minutes. We should sell off down to this low. But you can see we actually end up taking this protected high first. Just because the macro did that. So now we have this high taken. So I'm just going to clear this out and take this off because it didn't play out. So we tap discount, tap this 1 minute, went higher. So now we're just forming some more structure, right? Watching price. So in this macro, we have a downtrend, or before this macro, we have a downtrend. So right here, I'm wanting to see displacement above a high to go higher. So right here's a recent high. Market structure shift, where's this at? I always have trouble finding it. There we go. We have actually a new high right here. Now we did not close above it yet. I'm waiting for us to close above it. So here we close. Oh, no, we don't. Do we close above it here? There we go. Now here we close above it. So possible retracement into a PD array. Actually, I didn't see this one. This is actually where it is. So number one, we actually create this low and we tap discount. We get displacement up. So that's one sort of that's a couple concepts there showing us that we're bullish. But we actually have this recent high right here, and we close above it, and then we come back down and we tap into this for value gap. So this would be your entry. You'd put your stop at the low of this candle. This would be about a 3-point stop. You could actually probably move your stop down to here. If you're comfortable with it, this would be 5.75 point stop, whatever you're comfortable with. But now I want to see us possibly go higher. So we tap this, respect it. That's very good to see. And we get displacement up, and we end up taking this high, which could be your TP. So now we go up a little bit higher. And we create this SMT followed by a move down. And I marked out this 1 minute inverse fair value gap because if we disrespect this fair value gap, that's very bearish. So as you can see, we clearly disrespect it. Now I want to see a possible retracement back into this inverse fair value gap. So I have an entry right here, a couple ticks inside. So if we tap into here, I could see a sell off a little bit. So there we go. Sell side, or you could have your stop somewhere up here, whatever you're comfortable risking. So let's say I want to risk 10 points at the most. There's only 3.5. Right, it's very little moves today. Not much volatility, but we tap into this 1 minute. Here could be your entry. Here would be your stop loss. We're also in a premium of this leg right here. So I could see a sell. This would be your first TP. It hits. Second TP, you could honestly do discount of the range. So do it like this. So here could be another TP. And we sell off down to that TP. You could be out here, or you could put another TP. This would be another really good TP at this fair value gap. So since this fair value gap was respected, and especially since it actually made the move higher, most likely it could get respected again. So this would be a good TP to take off. So right there, TP hit. So from this little bit amount of risk right here, you'd be rewarded with all of this, right? With this entire move. So that's everything I really show you. It's really good risk to reward because we're very precisely getting our entries. Now we're in this 1 minute. So are we going to respect it or not? We could not. We do sort of right here, but then we just come back down. So we're going into this macro with the downtrend. So this is going to be a good couple of confluences. So we have this massive downtrend, and this is also a bigger macro. This macro is 30 minutes long, which is a pretty big macro. We do have a sort of an uptrend going into this, but then you could see once we hit the macro downtrend. But right here, we create this SMT. So number one, this makes us bullish. Number two, we have displacement up. So now I want to look to take an entry into a PD array. If we get displacement up, which the way a macro works is, I'm actually going to explain this a little bit. So let's say we have a downtrend going into this macro, but then we get displacement up a recent high, just like this. What should happen is we come down to a fair value gap, and then we reverse the move. This is exactly how a macro should work, in theory. But there's a little other. There's a couple ways you could trade it as well. You could just use it as a. It's sort of going to enhance the probability of a reversal happening. So we have an SMT created here. So most likely this SMT aligned with this macro, which is time and price, right? The time of the day can affect price aligned with the model. So this protected high, which number one, this is an SMT TP and a protected high. This is a massive liquidity target. This should get taken. I'm very confident that this should get taken. We also wick down. This is a massive wick, which shows that we're bullish. So I really don't have to see displacement above this high because we have all of these confluences. So we get this displacement up, and I would probably take an entry if we hit into, well, we have, I don't know why this is right that. This move right here. Hold on. I'm going to take this off. I don't know why I have that there. Actually, that might be for later. The only thing that's confusing about these chart annotations is that like I don't remember what they're for. So I'm just going to keep it there. So ignore these right here. Those are not being used yet. So we have this wick, right? I want to look to see some sort of PD array get hit. So we create this high and we have this low. This is a leg up. And then we actually come down and we tap discount of this leg. Sort of generate more structure. We have equal highs here, which is also a liquidity target. Now you could take an entry right here. I would actually probably, instead of this low that I have marked out, which this is sort of a thing that I've seen ICT do a couple times, is when you have a big wick followed by a body closure like this, you take it off the body closure. But personally, I would just take it off of the sweep of these lows. So let's say if you sweep of these lows, you also have this big wick. So we should not close below this 50%. This is called consequent encroachment. If we close below this 50% level, most likely it won't play out. But I do want to see a sweep of these lows to take an entry. I don't even need to see the sweep. I just want us to go down here. You could possibly take it if you saw us close right here. This would be a really good entry. So here's the entry of the sweep of these lows. And we also tap into discount here. And then we end up going higher. First TP, you could have right here where this 1 minute is and where the top of these, top of this where this buy side liquidity is, this engineered buy side liquidity. So here's your first TP. We hit this for value gap, but I do want to see us go all the way up to this protected high. And you can also see that this macro did reverse the move right here. So we're going up, just kind of consolidating, and then there we go. We take out this protected high. So in addition to this first entry, which you catch at the reversal, you can also take this at other entries. So we take this TP, we actually close above here. So this is kind of a market structure shift. We come down and we tap this 1 minute for value gap. We tap it a couple times, and this could be an entry. And just to milk out some more profits, right? So we took this protected high. Now I want to wait for more structure to take any sort of move. So we're kind of just building more structure. We take out this low, selling off a little bit more. This is something that's good to see now. So out of this leg, we slowly, and keep in mind we slowly sold off a little bit. So we're slowly selling off, and we tap discount. After we tap discount, that's number one PD array that I want to see to go higher. So now let's see a little bit more. Displacement up, that's another good thing to see. We create this 1 minute for value gap. We create this other 1 minute for value gap, and we're sort of respecting it. Not really enough here though. If I'm seeing this right here, right, this is really not enough to show me that we want to go higher. Just because we displaced up after this, tap this 1 minute, it's really not enough for me. And taking a profit at this high would really not be that great. I know that if I wait for more structure to happen, I'll get a more probable move. So we sell off, we have this 1 minute, we respect the 1 minute. And we actually come up to this, what is this? It's a 5 minute. We sell off, and right here is a lot more confluence. So previously we tap discount, we form some more structure here, but second of all, we create this SMT. So that's obviously going to show us that we're really bullish. This would be your SMT TP, and this would be your protected low. So we should not take this protected low until we take this protected, or yeah, we should take this SMT TP first before taking this protected low. I also have entry right here. The reason why is because number one, we create this SMT, we wick it, showing that we're respecting the SMT, and that respects this 1 minute for value gap that's previously gotten visited to. So I would take my entry at this candle closure right there, put my stop at the low of this candle, which is also equal to the low of the fair value gap candle. And my first TP would be at this SMT TP. Again, after this, we have a little we have a little displacement up. You could take a possible entry in this fair value gap right here. You could take another one in this fair value gap right here. You know, these would be your appropriate stops. Now this one you would get stopped out if you took if you put your stop loss at this candle low. Personally, I wouldn't, because this is half a point, right? Half a point's like nothing. So I probably would take it at this, but I would put it right down here if I was taking entry off this. But we go up, another possible entry, stop loss at this candle's low. Then we take out this SMT TP, another TP I would want to see up here. So we actually rebalance price. We tap into discount of this leg right here. And we go back to this previously visited 1 minute for value gap. After that, we go a ton higher and we take out this TP. So now on top of that, we are entering a macro. So it's at 3 o'clock. This macro is from 3:15 to 3:45. So it is another 30-minute macro. And now that I see this, I do want to see price possibly do some sort of reversal. We could also see some sort of just a little small retrace to discount and take a move off of that. So we just took out this buy side liquidity. I want to see a move down. Right, we hit a little one, but we're still going up. And now we're getting a little bit moved down. So right here, we have a market structure shift of this recent low, strong displacement down. We have a fair value gap created. I want to see us tap into this fair value gap to take an entry. Do you possibly take TP at 50% here? So we take this entry. Now, if I'm going to put a TP here, I have to be cautious because there is a 1 minute right here. So my TP would actually probably be at this 1 minute just to be safe. But also, my stop, I'd actually probably move to this candle's high, just so my risk to reward is good. So this would be a 3.5 point stop loss, and this would be a 5.75 point TP. So not that great, but you could still get some profit out of this. So we tap the 1 minute for value gap and we sell off to this TP. So worked beautifully. We actually sell off a little bit more, and we respect off for this order block right here. Now we're going back higher. You can look at this as just a retrace, right? Out of this entire leg, we tap discount, go higher. So after that, especially since we have a protected high way up here, I do expect this to get taken. So we have a 1 minute for value gap created right here. If we do tap into this, I would take an entry, which we don't, but we do take out this protected high. Now that we took out this protected high, this means that this entire model, this entire move, since this is the high way back here, every action that you see in here is considered to be a fractal on its own. It's considered to be a complete model, right? So you have this massive model where you can see right here, we actually form this high, we retrace to discount to then go higher to take out this high. This is a massive model, and inside this massive model, we have like a bunch of other models, right? A bunch of other models, and this is what fractals are. One big fractal, inside that fractal, we have a bunch of other fractals. And that's exactly just how the market works. It's like the Mandelbrot-Zoom equation. It's like fractals inside of fractals inside of fractals. So we take out this protected high. Now I want to see more structure. It is sort of going towards the market close, so I don't really expect to see much. But we do retrace the discount here. We do tap this 1 minute. We respect off this 1 minute. We get massive displacement higher. Take out this previous high. And we form SMT. And then right here is when market closes. and we probably just consolidate for a while. So here you can see we're just consolidating, we're not going to move anywhere, and so that's really all that. So this is all the action I went over, and now I'm going to quickly review each and every single, well, I'm going to review the good models that were out of this. Alright, so I'm back, and here's a little slideshow. So, okay, let me sort of explain this. So this is kind of off to the side of the screen, but here's the first model that was apparent today. We had downtrend, displacement up, right? Create a high here, and then we had market structure shift. This could honestly be market structure shift or any of these highs, but they're not really that standoffish. So this one is, and we take this high, we retrace back down, enter this fair value gap, and we move all the way up to take up this high. So this macro is helping us reverse. Next example here, we have in the beginning here a sweep of this low, tapping into a 1 minute for value gap. This right here would be a manipulation leg. These would be the standard deviation projections. We get displacement up, tap into the 1 minute for value gap, and we move up to take this first TP. And then after we tap to 2.5, which could be another TP, we actually retrace all the way down to discount, and we retap this 1 minute while also sweeping this low. We then move higher to this 3.5 to 4, and then we sell off and we create an SMT right here. This SMT shows that this high right here should get taken by either ES or NQ, and this is a protected low. This should not get hit until up here gets hit. We come up, respect this 1 minute sort of, we respect this liquidity void, and we come up and we form an SMT, which means ES has taken this high. So now I expect this protected low to get taken, and also this would be your SMT TP. After this SMT is formed, we sell right off, form equal lows here. We actually come back up. Here could be another entry, and we tap into this 1 minute. Stop would be at this high, and we sell off to take it. And then we come back, we tap the 1 minute again, and then we sell off to take this protected low. After that happens, we get a strong buy back up, which is also a manipulation because we take out all this liquidity, and we form another SMT up here. This will be your SMT TP. We also sweep this high, and we sell straight off to this SMT TP. So this is kind of just showing you, this is a great example of, this is a time frame of within, like, I don't know, maybe 45 minutes to an hour, I'd say this is. And look how many different models there are, right? If you know how to identify each and every little thing about price action, and there's way more than this that I just haven't gone over and also just haven't learned yet, but you can see there's so many scalps you can take within such a small time area of the day. So move on to this next example. Here's the standard deviation from this previous manipulation. And you can see we're selling off. We tap this to 2.5. We come back up to rebalance, and we tap into this order block. We actually tap 50% of the order block to then sell off, and we take out this sell side liquidity. We come down, we tap this 3.5 perfectly. This doesn't dig into it though, which I would want to see this dig into it. So what happens is we come back up, and you can see from this leg right here, we respect OTE, which is the 70.5% level of the range, and then we sell off to then take out this low, and that leads into this example. So right here, we are sort of in a big downtrend going into this macro. So what happens here is that we have a market structure shift. We go above this high, or even you could say this high right here. We come down, we have this fair value gap. We tap into the fair value gap, respecting it. We also tap into this order block, which is all inside of this fair value gap candle. So then you could take entries there, It would be a little scary though, because this is 50% of the range, so we could have dipped into here. But the way the macros should work, this model should respect this fair value gap right here. So we buy up, we take this TP, and we sell down, tap the order block again, then we tap 50% of this entire leg, and then we finally buy back up, taking out this SMT TP from this SMT, and we tap discount to then go higher of that leg. So then up here, we take out this protected high, form an SMT up here. We also, after we took out the first protected high, we come down, tap into this fair value gap down here. We come back up, respect this premium level, come down, we take out this sell side liquidity. You could also put manipulation projection right here on these candles, which would probably project somewhere up here. We then buy back up, market structure shift. We're in a macro, but there's no entry in here. But this is the macro downtrend here. Macro reverses up to take this high. So then we form an SMT up here. This low would be your SMT TP, but we just don't end up hitting it because the macro wanted to reverse the move. It doesn't want us to sell back off down to here. So we actually just tap discount. We tap this 1 minute right here, and we buy back up to take out this buy side. After that happens, we got some more examples of more scalps. So we take out this buy side, we just sort of chop here, generate some structure, form this low. We're sort of in a downtrend going into this macro. Macro reverses us. Inside of this reverse, you can see out of this little leg right here, we tap discount, strong displacement up. Here'd be your market structure shift. Here'd be your fair value gap entry. You'd put your entry there, stop at this low, and we buy all the way up to take out this TP. Additionally, we create an SMT up here. This means down here would be your SMT TP, and it would also be, well, we'll go into that in a minute, but this would be our SMT TP. So we sell off right here. We disrespect this inverse 1 minute. We come back up, tap the inverse 1 minute. This could be your entry. Then we sell off. We take this low. We take 50%, right? And we take this TP right here, which is this 1 minute for value gap, right? That has previously been hit. And then we have a downtrend. I think this is the same. Yeah, this is the same example. We have a downtrend going into this macro. We go down and we end up forming an SMT down here. So then we get displacement up. Out of this leg right here, we tap discount down here. Your entry could be a sweep of these lows. I don't want to see us close below the 50% of this wick right here, which is consequent encroachment. And we actually respect that. We come up, right? And you have your first entry here. We come up. You could take a second entry in this for value gap to then target this protected high. And then a little bit later, we have another example. So we form an SMT down here. This is an SMT TP. And then your entry could be a respect of this 1 minute for value gap after this SMT is formed, especially because we revisited it once. Candle closes right here. I'd want to put an entry in. We sort of chop a little bit. We don't end up hitting the sell side liquidity, or we don't end up hitting the stop loss. You could probably put your stop down at this low because this is the protected low. That'd probably be a little bit more safe. But then we get displacement up. Here's another 1 minute for value gap entry. Buy back up more. We take out this SMT TP. Here's another entry you could take to then take up to this TP. We buy up here. We come down, rebalance. We hit 50% of this leg right here. And then we end up buying back up to take this TP. And then last example here, we take this TP. You can see we're in an uptrend going into this macro. And then this actually gives us a retracement. So it's sort of like a reversal, but it just retraces us to 50% of this previous leg, which is this entire leg right here, or it's this entire leg right here. So we come down here, we tap this order block as well, respect off, and you can find an entry in here to find the reversal. So we create this high right here. We come down, market structure shift because we close below this low, come back up for value gap entry. You could take TP at 50% right here. Or you could even take TP at this order block, whatever you're comfortable with. And then we buy back up We take out this protected high. We tap into out of this leg right here. We then tap into discount, hit this 1 minute, and then we end up heading higher, where that's basically where the end of the day is. So that is really all I have for this charting session. I hope you guys all enjoyed. Again, feel free to check out my Discord, watch the series. If you start with episode 1 and work your way up, you're going to be set off, and you're going to understand everything that I'm talking about. So yeah, that's all I have, and see you guys in the next episode.